Hello from Kingston Business School and welcome to the third webinar in our AI in Business online panel series. My name is Samar Gad and I'm the Director of MBA in Kingston Business School. Today we focus on powering AI infrastructure, energy and sustainability. And we're going to explore three themes today. And the first is the coexistence of AI infrastructure and the demand on energy, water and renewable power grid. And the second theme is around what does responsible AI deployment look like in practice? And lastly, how AI deployment is governed and disclosed to boards, regulators, and the public. Please welcome our fantastic panelists. Today we have Imane Bakkar. She is a risk management expert and a senior markets practitioner, and she's currently the managing director of Loga Risk, and this is a boutique risk advisory company. With nearly 25 years of experience in risk management, she has worked in senior risk roles at two large US banks and spent 7 years as a policymaker and regulator at an advanced economy central bank. Her areas of expertise include commodities markets, sustainability-related risk management, financial stability, and market structure and AI governance. Great to have you with us, Imane, today.
Hi, everyone.
Please also welcome Dr. Wendy Dobson. Dr. Dobson works as a senior advisor at the United Nations Environment Programme Finance Initiative, and her work focuses on sustainability risk management as well as responsible banking. Dr. Dobson is an experienced sustainability leader, having led the sustainability team at Standard Bank, which is Africa's largest banking group. In this role, Dr. Dobson transformed the bank's sustainability strategy, aligning it to the group's purpose and commercial objectives. She also spearheaded the development of the bank's climate policy and risk management framework. And she is also an active participant in the launch of the UN Principles of Responsible Banking, which is the world's largest community of banks driving sustainability and climate action. She served as the co-chair of the PRB board for 4 years, and based in London at the moment for the last 3 years, Dr. Dobson consulted to corporates and banks on sustainability strategy and climate risk management. And finally, Dr. Dobson has a PhD from the University of Pretoria's Business School. Great to have you with us, Wendy. So feel free to ask any questions throughout the conversation. Just text your question in the Q&A as we go through the discussion. And let's get started. Just to set the scene for today's conversation, the International Energy Agency projects electricity consumption from data centers will roughly double by 2030. And this is driven largely by AI. And this is not just an abstract global statistic. Brookings reported earlier this year that in Dublin, data centers already account for nearly 20% of local electricity demand. Imane, from a risk management perspective, how should we be framing this? Is it a supply problem, a demand management, or a systemic resilience aspect?
Thanks a lot, Samar. So I'll kick this off and for setting up the scene. So to answer this question, I will take you, Wendy, and our audience a little bit down the history lane. If you think about electricity and the power grids, we have modern power grids since the 20s and 30s, but the power grid as an infrastructure for electricity as we know it is more around for the past 30 to 40 years. So we had a long time to understand the supply and demand, which was supply mainly coming from fossil fuels, whether it's gas, coal, oil in some instances, or uranium for a nuclear power plant. And the supply was mostly large industries like steel, aluminium, and our consumptions. You know, you turning the heating on, or someone in hot countries turning the aircon. And engineers, risk managers, companies with dependencies on electricity understand this very well. But in the past 10 years, the way I like to characterize it is we have a new electricity equation. So to answer your question, it's systemic resilience with complexity introduced by what I call the new equation of the electricity. This new equation is, on one hand, the supply has changed because now we have a lot of renewable supply. Renewable supply is great because emissions are down, and also from a geopolitical perspective, you're less dependent on fossil fuels. But renewable supply at the moment is intermittent and is very, very weather dependent, whether it's solar or wind. So it needs a new understanding, new capabilities for risk management. So you do have that renewable supply. There are also batteries coming in to be able to store that electricity. So the supply side has changed. In addition, of course, the fossil fuel side of the supply is still there. So you have a new supply side of the equation now. And then on the demand side, and this is the topic we're talking about today, we also have a new side in that for that side of the equation, which is before the demand, as I said, was industry driven and also us driven. Now we have new demand sources. I'll start from the niche ones to the big ones. So for example, cryptocurrency, video games, people don't think about these, but in some parts of the world, they are very high demand of electricity. Then you've got obviously electric vehicles coming in, which also will be a new type of demand. And then finally, artificial intelligence is also a new type of demand. And as you said, depending on the parts of the world, that equation is more or less complex, but not necessarily driven by the same factors. And I finished there to hand over to Wendy in case she wants to add anything. But basically, on the supply side, I would say it's global because the majority of countries are building renewables, whether it's solar or whether it's wind. So the supply side change has happened everywhere and is continuing to happen in some parts of the world. On the demand side, if you look at the International Energy Agency report that you cited, Samar, you will see that in the US, it's projected that data centers will be almost half of the demand, will be almost half of the increase of demand by 2030. Whilst if you look at Europe, you will see that transport will be driving the increase of demand by 2030. And then depending on when you look at other countries, whether from emerging markets, you will see that actually the demand side depends on whether there is a concentration of data center or there is an EV push, etc. So I would say it's a systemic resilience problem where we will have a new form of critical infrastructure. And for us, risk management community is a new type of complex risk management problem to solve. And Wendy, I don't know if you want to add anything to this.
So the source of demand is different based on regions. Wendy, what are your thoughts?
No, I totally agree that this is about systemic resilience. And as risk managers, people who are interested in risk, you can't look at this in isolation or only look maybe at your company. You need to consider the system effects. It's interconnected. I think an interesting statistic to share, to add on to some of those already, is that in the UK, there is a demand for 125 gigawatts of power. This was June last year. Now, around 50 gigawatts of that is just from data centers. Now, that is an incredible amount of demand on the grid. So it's not just about whether we can bring new generation capacity online in terms of renewable energy, even nuclear energy, which the growth of data centers is driving more supply. But can the grid infrastructure, the interconnections, actually cope with that? And that is something we don't we don't always think about when we're thinking about, investing in data centers, using AI. We have to be, as risk managers, to think about how these things fit together. You can't just look at it as one discrete element.
So speaking of data centers, we can't really not talk about water cooling and how central it is to data center operations. And we need to bring it in this conversation. So Wendy, how significant is this blind spot?
I think this is very significant, and I think it doesn't get the same attention as the energy side does. And the two are not equivalent. So we can generate more power. We can, we can have wind farms, we can have solar, we can have battery storage. But water, we run up in terms of some very, very hard constraints. The whole concept of sort of net zero, it doesn't work when it comes to water. I can't say to a community in Ireland where there's been this massive growth of data centers, sorry, this new area of housing development, you're actually not getting the water because we're diverting it to data centers. But don't worry, we're building a dam and some new water infrastructure, somewhere in Indonesia. So it's, it's net zero. It simply doesn't work like that. And data centers are incredibly water intensive, and they can't just use any water. It's not just a question of circularity and recycling. They need a certain quality of water to work. What's interesting is that you find that a lot of data centers are being built in areas that are already under severe water stress. And there's not enough transparency, there's not enough discussion about the water implications of these data centers. Now, in some cases, what we're seeing is a complete mismatch between industrial policy set by governments around, yes, we want to build these data centers, for example, in the UK. They've got 5 AI growth zones, but it's not connected up to the water needs and the water availability in those zones. That's a real risk. In some places, what's happening is it is driving innovation. So you're seeing some of the big hyperscalers are being sort of forced, if you like, to think about new innovative ways to use water more efficiently, to use alternative forms of cooling, and that could be, it could be a good catalyst for that, and that could be, then applied perhaps in other industries as well. But it really is a significant issue to think about. Just the incredible drain on water that these data centers make.
So there is a balancing game here between the substantial demand and cost of having that high quality water and the innovation that would come from investing in AI infrastructure. So if I bring the conversation towards a broader aspect of risk management, Imane, in your view, what are the stress scenarios to consider with the introduction of more AI infrastructure, given what Wendy shared, and also at a time when the power grids are themselves evolving?
Yeah, thank you, Samar. And so I would say I will start from board level and then down. So if you are a board of a company, and I think we're going to talk about this in this talk a little bit later, is understand your dependencies on 1, electricity, and 2, on AI. Because these two are so electricity in general, their dependency on the electricity grid and on water as well for some industries, if you're a company dependent on water, understand the local environment, connectivity to the grid, and also your local dependencies on electricity in general. And then for AI, many companies are using third-party vendors, so understand also their dependencies to the electricity grid as well, because there is a dependency effect there. And in terms of stress scenarios, I'm going to give a few examples. I will start with an example that is relatively recent, from November to 2025, and actually segueing from what Wendy was talking about around cooling for data centers. So in November 2025, the CME, which is one of the largest exchanges in the world, the Chicago Mercantile Exchange, trades many fundamental contracts, worldwide contracts. Everyone in finance can rely on that works in the financial industry, relies on some traded products on that market. So the CME had 11 hours outages on a day of November 2025 because of a cooling problem in a Illinois data center. So you can see here the dependency here can be quite remote. If you think of it theoretically, it seems remote. But actually, if you are a bank in Japan trading on CME, you would have been impacted by a cooling issue in a data center elsewhere. So this is a stress scenario that could be worth thinking about, again, like in terms of dependencies. That's one example. Widening it, another example is, again, I'm segueing from what Wendy was saying, and I'm looking at my note just to cite the right authors. So there were two studies I want to cite, and I don't know, Samar, if we can link them when you publish the webinar. So one was by Siddik and al. In 2021. They looked at 2,400 data centers and actually mapped them in terms of heat risk, in terms of temperature risk, and water and other environmental risk, and found a lot of them are in stress areas. So again, what are our that's to build a stress scenario. And again, I'm talking from a risk management perspective. Okay, so can we understand the dependency and what that means for specific businesses? And finally, to cite another study, this one by Maroney and al., which they looked in particular at Ireland, and they looked at concentrations of data centers in specific areas and the stress and potential stress scenarios that impact the zone where they're in. So that could be also a basis to build a stress scenario for risk management. And finally, it's worth remembering that when we talk about electricity grids, now it's critical infrastructure. So it is subject to geopolitical risk. It is subject also to regulatory risk because of local, for example, the European grid is very interconnected. So changes in regulations in one area will impact other areas of Europe because of transmission lines, etc. So it is worth to think about that as well if one is building a stress scenario. And I'll stop there in case Wendy wanted to add anything from how we could all, think about this risk analysis around electricity.
Just one point before I move to Wendy, Imane. So you mentioned third-party vendors. Do you mind clarifying to the audience
Sure.
what would get an institution to depend on third-party vendor or not to, provide energy and supply for their AI infrastructure?
Sure. So if you are a company that invested a lot, and this is not specific only for AI systems, by the way, this will be for any third-party vendor that provides software capabilities that are essential to your company. So if you have a business and you rely on an external, you don't build your software in-house, but you rely on another company to provide you with software, whether that software is AI or not AI, that is a third-party vendor risk to you. In the financial system, there are actually regulations, for example, by the Prudential Regulation Authority in the UK on what you should do to risk manage the risk to third-party vendor. I don't know enough about other areas outside the financial system to say if there are similar obligations, but it's good governance practice to think about that. So now say, your company depends specifically on a specific software, and that software relies on the availability provision of both data center capabilities and electricity. Therefore, you want to understand what happens if that there is an extreme stress? Or also, what are the steps that your third-party vendor took in order to protect themselves against cyber attack, for example, against geopolitical risk considerations, against power outages, or against the inability to use certain data centers capabilities? These are just examples, but when your company has a software that it is heavily dependent on, that is when we talk about third-party vendor risk.
Makes sense. So, Wendy, in the stress scenario similar to what Imane mentioned, with CME and the 11 hours outage, how do we make the right decisions on infrastructure? How do we maintain human expertise to, balance those competing priorities?
Well, I think there's a lot of talk about AI sort of resulting in de-skilling and affecting our critical thinking skills as human beings. And there is some academic evidence starting to emerge to support that. But I think there's good examples from other industries, not necessarily in relation to AI, but in relation to automation. So if you look at like aviation, where you have autopilot, you've had that for a long time. There are certain other sort of sectors. I think another one is power generation, nuclear power, where you where systems are built with redundancies in place that have to have human, overrides. As yet, we haven't sort of outsourced certain final decisions on what to do and what not to do to a system, to an algorithm. So we have to think about in our businesses those sort of important decision-making points where you can get input from AI, but you need to retain the people making the decisions. I've heard of a bank that is experimenting with having an AI board member, which, to be honest, I felt was rather risky. And I'm not sure from a governance point of view how you hold that AI director accountable. But I think what we're moving towards is it's almost this augmentation where, we're using AI to help us, process lots of data to help us think through maybe different scenarios in different ways. But ultimately, the decisions have to remain with the people. And in a company, there are accountabilities and responsibilities through corporate governance where you can't absolve yourself of responsibility because you said you relied on AI. And I think what it comes down to is, in a way, it's old-fashioned business continuity management and resilience. And it may feel like maybe you're just at the small business, maybe you run a little independent coffee shop. This, doesn't mean much to me. But many of these small businesses now don't take cash. They rely on mobile payments. And that all happens in the cloud, and that's all happening in these data centers. And, when that goes down because of a fire or because of a flood, because there's sabotage, because of community opposition, there's massively amounts of growing community opposition to data centers. Suddenly, your payment method isn't working, which means you can't take revenue. You may have to close your business for the day. And I lived in South Africa for 40 years, and I lived through 15 years of what was called load shedding, which is where our electricity supply couldn't meet demand. So on a rolling basis for 4 or 6 hours at a time, we would have our power switched off. And over time, businesses had to either decide to close for that period of the day, or they had to invest in backup systems, diesel generators, with all the costs and the risks that went with that to have business continuity. So you might feel that, this whole discussion about AI and energy grids, it's a bit far removed from your business. But even the smallest and simplest business has some risk exposures when it comes to AI, to data centers, to the electricity and water systems.
And can I come just with a small point? Actually, this is an excellent point from Wendy. And to give a concrete example to our audience today, there was most of you will be aware of the outage in Spain and Portugal last year, right? And
Yeah.
that was a massive power grid outage. It had nothing to do with data centers. It was due to other outage issue, but it illustrated the payment risk that Wendy is alluding to, because, for example, people wanted to go to supermarkets just to buy water, for example, or like lamp torch for the night, but they couldn't pay because the payment system didn't work. So the dependency through payment system is very important. And in fact, I remember at the time, because I am a risk manager, I did look at what are the recommendations of the UK government in case there is a power outage. And one of them is have some cash. So it's a real risk that Wendy has talked about, the inability to be able to receive payment in case of a power outage. So again, it's very clear risk scenario in terms of a stress extreme event. So sorry, I just wanted to add this as well.
Thank you, Imane. So speaking of governance, right? And you mentioned Wendy hyperscalers and the fact that they operate in water-constrained regions. Can you tell us what is responsible risk disclosure and what would a responsible risk disclosure look like for hyperscalers?
Yeah, I think we're not seeing adequate disclosures, definitely, and what we need to see is information about energy and water use at quite a granular level. It's not helpful to see it at an aggregate level because perhaps to some extent with energy, but definitely for water, you need to know by facility and by the location that it's in, what those metrics are in terms of energy and water use. And there are things like efficiency. So, there is an industry average water usage effectiveness, and it's sort of how many liters of water are used per kilowatt hour. And then there are benchmarks where then the public, investors, other stakeholders, governments would be able to see, is this data center facility within an acceptable margin of that? And if not, pressure could be taken to bring them within that. Also, it's not just after the fact. So, it's one thing to have these disclosures on an ongoing basis, but when they're seeking planning approval, there needs to be, a lot more granularity and due diligence around these things. What you see, for example, I think there was a case in the Netherlands. A big hyperscaler built a data center that actually consumed 7 times as much water as was in the initial planning application. Now that's a significant amount. That's a significant difference. Where's that extra water coming from? It's coming from another user. Now those other users could be agriculture. They could be households. It could be other data centers. So we need efficiency disclosures at a granular level so that we can start to compare and we can have benchmarks and we can make the necessary adjustments. There is better disclosure on energy use. It's still got some way to go, but water is very, under disclosed. So we need to see these things being built into the financial reporting of these hyperscalers, because these are financial risks. They're not just kind of environmental risks. These are financial risks to your ability to continue operating. And what I think we're seeing is we're going to see the funders, the financiers of this infrastructure expect a lot more of this disclosure before they grant finance and credit going forward.
So sometimes it goes above the target 7 times?
Yes. This was a particular example, one of the big hyperscaling companies. I'll give you the name of the place in the Netherlands where it was. I think it's called Middenmeer in the Netherlands. And this was drinking water. It wasn't even sort of potable water. So yeah, it's quite, it only came to light because there was a drought and water was being restricted to farmers in the area. So you can imagine then it also turns into sort of social risks, strikes, protest actions. It becomes political risk. So as I said, these things are interconnected and risk managers need to think about the connections between them.
Thank you, Wendy. So beyond water, there is another resource dimension worth exploring today, copper, rare earths, and other critical materials which underpin both AI infrastructure and the clean energy transition. So Imane, what are the supply chain risks to consider here?
Yeah, so very important question in the context of the electricity grid in general, and then in the context of AI in particular. So most of you will know for electricity grids and for, upgrading it, making it more robust, etc., you need a lot of cables, meaning you need a lot of copper, for example, etc. And then to build chips, to build anything we need for either EV batteries or batteries that we need to store the solar and wind energy and stabilize the grid, and also to build chips, etc., for AI and data center compute, you need a lot of rare metals. I'm going to start by saying the first risk there is to supply chain is the concentration risk. By concentration risk, I mean the concentration of the places that produce those metals. If you look at, and then when it is concentrated, then it means there is a dependency, one, on geopolitical stability of those regions, and two, on the shipping routes from those regions to other parts of the world. Starting by the geopolitical stability, I will give as an example, cobalt. Cobalt is essential to all the technologies and the topics we were talking about so far, and it's concentrated in production from the Democratic Republic of Congo, and therefore is very dependent on the supply chain from there and on geopolitical, and then sensitive to geopolitical risks of the region. Another concentration is around copper, where if you look at the top 3 producers, they would cover the majority of the production. So again, as Wendy was saying, social risk dimension, anything from strikes to protests on mines, or to geopolitical stability in certain regions could, for example, then feed down the line. Other supply chain risks, as I said, were shipping routes. So, for example, on shipping, this is, I will say, obviously, we've all, I think everyone listening would be familiar with the Strait of Hormuz crisis, which impacted, oil and gas flow. But now think about other shipping routes and what is carried through them. I will give one example, which is actually not a geopolitical risk, but a weather risk, which is the Panama Canal. So the Panama Canal is a massive passage for ships that are transporting things, including metals. And Panama Canal recently have been seeing recurrent droughts. And because Panama Canal pulls the water from neighboring lakes, and if those neighboring lakes have droughts, you cannot fill the canal. And if the water is too low, the ships cannot go. And I'm basing this on 2023, where the Panama Canal had one of the biggest droughts before, and therefore had, I think it reduced the shipping, if I remember the stat correctly, by 30%. So you know, and again, this is all interlinked. We're going to come to this word a lot, and especially when we wrap up, when we talk later about governance, like this is all interlinked. So more extreme weather frequency means more likelihood of high temperature and more likelihood of droughts, and these can impact things like shipping. And shipping is a key component of supply chains of metals and of chips that are used for AI as well. So I'll stop there because it's quite, we can do a whole talk just on the metals supply chain, but I would finish by saying, actually for metals, there are also standards that are emerging to also define what is a sustainable metal production from a supply chain perspective. So for example, in the UK, there is the copper mark, which is a standard setter for metals. And there are many other standard setters around what does it mean for responsible mining, what does it mean for supply chain, for sustainability. So worth thinking about identifying those standard setters and looking at, if you're dependent on a metal supply chain, whether you have whether they are aligned with those standards.
I really appreciate how, when I asked you like supply chain risks, I thought you would just mention the shipping routes, and you just brought in concentration risk, geopolitical risk, social risk dimension, and also now we know there are particular measures for sustainable metals also, which will come through, or are they already existing?
So there are many non-profits which are standard setters for metals. So the copper mark is one of them. I believe it's based in the UK, but basically also the LME, which is the biggest metals exchange, also requires some criteria. So again, worse when if you're dependent on metals, or if you are dependent on chips in your supply chain, worth checking those standard setters and what they are asking, and to see if the metal is responsibly sourced.
Makes sense. So speaking of environmental risk, Wendy, the UN Environment Programme Finance Initiative has really been at the forefront of helping financial institutions understand and disclose environmental risk. But when it comes to AI's energy and resource use, the disclosure landscape is still very much taking shape. Now, looking at it from a wider sector perspective, how could C-suite, boards, and risk managers look at this from governance perspective?
Well, I think the first thing is this is on their agenda. So is this one of the top risks that they're thinking about in their business? Or is this something that is going to, if you think through those scenarios that Imane has shared, if you do that kind of thought experiment as a board, then are you identifying where you have a material risk in your business? So you're exposed to some aspect of this on the energy side, the water side, the supply chain, your use of AI, for example. So is the board thinking through, its risk exposure and how that might transmit into its ability to generate revenue into the future, and to be profitable into the future? So is it actually going through that exercise, almost like a scenario analysis? Then it needs to think about, okay, how do we, who in the management team is responsible for monitoring this on an ongoing basis? Where in our business is the most appropriate place to monitor this? And what kinds of tolerances do we have in terms of, when do we need to have sort of a red warning light go on and come back to ExCo or the board to tell us we need to make a shift, we need to make a change. So bigger companies may want to think about having an AI policy that sets out their approach to this. Are they quite conservative and risk averse, or are they willing to tolerate a higher level of risk because they're quite growth orientated? To think about that and to think about who's accountable for managing those things. And then they need to think about, well, what are the actual key risk indicators or metrics they're going to collect on a regular basis and feed back into the different decision-making parts of the business. Now, these aren't necessarily ESG metrics. They're actually like sort of leading indicators of financial risk and operational risk in your business. So maybe they sit with your operations manager. Maybe they sit with a procurement team if you've got a lot of third parties that you rely on. But are you gathering and collecting the right measures so you're aware of what's going on, and then you can take the necessary action in your business to be resilient? Do you have a business continuity plan? Is it updated to take these things into account, or is it something you did, you last did during COVID and you haven't updated since then? And has the board interrogated it and signed off on it? Do you know what to do in a crisis situation? Are all the steps outlined of who does what, should there be an outage, for example? And then I think if you're a listed company, there are things you're going to have to be disclosing to your shareholders as well. And while disclosure frameworks are being developed, there are existing things that you could easily modify, like the ISSB standards, for example. You could modify climate reporting to do this. The UNEP-FI is working with a group of banks on this topic, both looking at it from a risk point of view, but also in terms of responsible impacts and how to manage the impacts on society and on the environment as well. So I think we will see things emerge in this space. But I think at a principle underlying level, this is applying all your normal risk management principles, but to what is a new risk type, perhaps related to AI and data centers.
Fantastic. So thinking about risk exposure, scenario analysis, understanding tolerance level, and having an AI policy to understand who's accountable for what. Imane, do you have any thoughts?
I concur with everything that Wendy said, and I'll add that for those interested, the UN actually has commissioned a report on AI governance, which was published, I believe, yesterday or the day before. And the exact name is the preliminary report by the Independent International Scientific Panel on AI. So if you type UN or UNESCO panel on AI, you will find the report, and in it there is a big part on the governance and decision making, which exactly asks businesses, policymakers, regulators to go through this decision thought process of, do we know what to do if there is a failure point? And also, do we understand our dependencies? What are the points where our decision making is dependent on the provision of electricity or AI? They do have a small section in that report on environmental risks as well, which is some of the parts we have spoken about today. So worth taking a look. They do have a very short executive summary for those of you who are short on time. The second thing I would say is, in some regions of the world, and definitely in Europe and the UK, most of businesses, especially in general and in the financial system, are asked to think about sustainability-related risks. And in fact, AI, in my opinion, AI risks map to sustainability-related risks. For example, from a social risk perspective, we just talked about, labor dislocation, labor impact. We've discussed possible geopolitical risks, etc. So it does map there. And from an environmental risk, it's AI is sensitive to weather risk, is sensitive to water stress, is sensitive to a lot of the environmental risks that, that, as Wendy said, could concretize into becoming financial risks. And then finally, from a governance perspective, policies are essential, and in these policies, it is worth framing at a board level, at an executive risk committee level. What are the decisions that cannot be delegated to AI, for example? Because, and also, do we have a good understanding of the use case for AI? These are two fundamental questions that are wider than, just electricity. But by asking these questions, it can trigger reflections around, what is the dependency and the risk tolerance we have, which is an essential part of risk management. And I'll stop there because, again, every firm has their own approach to governance, but I think it's asking the question and thinking about it is a good start.
So really going back to the most important question, the impact of the use case and whether or not we should prioritize it and go ahead with it. Thank you so much, Imane. We've got a few questions from the audience, and I'm happy to ask the first one, which is about backlogs of substantial connections globally. And the question is about whether AI enterprise operators should stop waiting for the grid and pivot entirely to on-site microgrids, modular generation, or co-location at the power source.
Okay, I can take this one. But I am sorry that I will start by saying that none of us here are power grid engineers. That said, I will refer to Delzar Alquez and Yves Foley from the University of Manchester, who have done a lot of research on the topics of power grids and how power grids can cope with AI and what the AI patterns introduce in terms of stability. They were, not to advertise them, but just because this is a research I read recently, they were, so again, I mean, if possible to link all this research I cited into when the webinar is posted, you might find your answer there, but I would say, the answer is it depends. I don't think there could be a good answer to this before we analyze what's the status of the grids, what's the need for the micro local one, and what is the source of the electricity you're going to use. For example, is it mini nuclear reactors, or is it wind generation, or is it solar panels? And also, ultimately, even if it is local, do you connect to the grid so that you have an arbitrage to do? When you have an oversupply, do you give it back to the grid because that has a price? So the question whoever asked the question that you asked has also financial elements to it, because if you have a local production, even if narrow, you need to also connect to the grid, if only for backup plants. But then what do you do with the extra electricity you could generate? So it's a much more complex question than thought about. So it's not as easy to say that, oh, actually, if you have your own micro generation, it's problem solved. So sorry that I couldn't answer in more details, but that's the best I got.
But thanks for the references as well, Imane. We have another question, and we have Viv, who asked, are there any synergies, circular economy efficiencies coming between wastewater management and data center water usage? So are there any synergies or circular economy efficiencies coming between wastewater management and data center water usage?
I'm not aware of specific examples, but what I do understand is that these hyperscalers are themselves aware of their dependencies on water. And so you are seeing an experimentation, an innovation taking place to find solutions around efficiencies and circularity and so on. And I think we will see more of that. I think this is going to really drive that. And I think that's because it's a hard constraint in their business. It's not just because they might feel environmental pressure. One could debate whether that moves the dial at all on these companies. It's more to do with the fact that they will not be able to function. They will not operate. So I think we will see more and more innovation, and then it depends. I think that it's a technological issue in terms of what will work and what won't work. We're seeing one of the big hyperscalers experimenting with building the data center under the water. This is off Finland because it's cooler. I think Iceland is also experimenting with some of those things. So we're seeing these different things happen. Some will work, some won't work. So I think that will be an interesting space to watch.
Thank you, Wendy. Our next question. Given the trajectory of AI infrastructure demand, is it possible we will look back on today's resource constraints around water and energy in the same way we reflect on the early internet scaling challenges in the 1990s?
I can take this question. I would say we talked a lot here about risk and how to quantify that risk and how to introduce some governance into that risk, right? But we have to look also at the opportunities. There is a lot of opportunities for innovation here. And I am sure that, currently there are many examples of people thinking of innovative ways to basically introduce better management in terms of AI demand of power to optimize the efficiency of the power grid. I know that there are some power grids, localized power grids, that are experimenting with actually using AI, ironically, to optimize and make the usage of the power grid much better. In terms of either the computing chips or in terms of the models or in terms of the water usage, as Wendy was saying earlier, there are a lot of companies that are actually thinking of solving these problems. So if we go back to the internet of the 90s and now, which was the question, I would say, yes, there is an angle where it is similar. And I'm 99% sure there will be people who will find solutions. And I think there are a lot of opportunities to develop solutions. The key difference, though, is that the AI story is fast moving and evolving a lot in complexity versus internet. Because internet, once it was established, yes, there were some changes, but they were, I would say, less exponential in nature, and the internet itself involved, we have now fiber and etc. But like the internet equation side of things stabilized, and then when it's stable, it's easier to find solutions. While here we're trying to find solutions to a fast-moving train, and we haven't talked about this at all, but we do have quantum computing, which is coming soon. Quantum computing horizon is 2031 too. So I would say yes, there will be solutions similar to the 90s for internet, but the challenge here is we have a really, really fast moving train.
One of our members in the audience, they have a question. So they brought nuclear as a more reliable form of energy. And the question is about, isn't it one of the downsides to renewables, wind and solar, that we would need a lot of energy storage, batteries, to make it reliable?
So I would say that all energy type has risks related to it. And the key here, again, like the key here is not to say this is better than this source is better than this source. Is, do we understand the risks associated with each source of energy as well as the benefits? Because it's a cost-benefit equation. It's not only the cost side, it's also the benefit side. So based on that, I would say that renewables, whilst intermittent, are getting our battery storage will improve. And again, there is a lot of new technologies to improve storage for batteries, which would contribute to stabilizing the grid. And then I would say nuclear energies for countries that kept nuclear provision, like France, is reliable. That said, and maybe Wendy, if you want to add on the water side, on nuclear energy, it is worth noting the dependency on water temperature, because we come back to the same family of risks, regardless of whether it's fossil fuel or renewable. Is actually whether will become very important, whether it's for fossil fuels or renewable. Nuclear energy, why not? But do you have the water to cool the engines? Because, for example, in France, when the water is above a certain temperature, the nuclear plants have to switch off because they cannot cool down. So again, I don't think starting point is this source is better than this source. The better starting point is cost-benefit analysis and also understanding the risks and the associated solutions, I would say. And I don't know, Wendy, if you want to add anything.
Yeah, I totally agree. And it's about what is the right energy mix based on that, that risk assessment and that cost benefit analysis. 100% agree. I also think there's the social element on nuclear. If we think people are opposed to having a wind turbine in their line of sight, and people have protested about data centers being built in the communities, you see a whole nother level of opposition to the building of nuclear, even modular nuclear reactors. Nuclear is also incredibly expensive to build new. And as yet, we have not seen the modular reactors really take off in any kind of scale, although that may change through this. So yeah, it's about what is the right energy mix, and whatever it is, none of them are risk-free. And I think what we keep coming back to, I guess, is these risks interconnect, and they can have sort of a really domino effect. For example, one of the things we haven't highlighted, but there's a big financial risk to this. We could have another financial crisis. Bank lending to build data centers has, blown up incredibly. 1/3 of all private credit deals last year were related to AI. And if that bubble bursts, as it did like Internet 1.0, for whatever reason, there's a massive financial risk to the financial system as well. So all of these things interconnect, and the responsibility of risk managers is to think of all the worst case scenarios and how these things could go, and take the necessary steps to ensure they have a resilient business.
Thank you, Wendy. I believe we've covered significantly few important things, starting from having a complex equation when it comes to the supply and demand, and having key drivers which are different when it comes to identifying the demand and the pressure on the power grid. And we also explored the different resources we need to build and really work on the AI infrastructure. And of course, we couldn't miss talking about AI governance and responsible AI disclosure. I very much appreciate this conversation, and I hope everyone who joined us benefited from this as much as I did. I found it extremely constructive, and thank you very much for taking the time, and thank you very much for everyone for joining us. And we hope that you join us in our next webinar in the autumn, and stay tuned. Thank you. Thank you, Imane. Thank you, Wendy.
Thank you.
Thank you.
Bye-bye.